Your brand new iPhone deserves the best protection, and the iLune 3-Pack Screen Protector plus 3-Pack Camera Lens Protector has you covered. Don't take risks with your iPhone. Click the link in the video description to shop now on Amazon.
Welcome to Qualcomm Pulse, where we dive into the latest news and trends in the world of technology. Today, we're talking about a company that's been making waves in the chip-making industry, Qualcomm. So, what's going on with QCOM? Well, for starters, it closed at $129.72 in its latest trading session, which is a pretty significant gain of 1.77% from the prior day. That's even better than the S&P 500's loss of 0.23% and the Dow's decline of 0.91%. But what really caught our attention is that QCOM has been on a tear, with shares witnessing a loss of just 20.94% over the previous month. But how does this compare to its peers? Well, the computer and technology sector as a whole has taken a hit, with a loss of 16.18%, but Qualcomm's performance isn't too shabby. And if we look at the S&P 500's numbers, it's clear that QCOM is holding its own. So, what's driving this growth? Well, investors are certainly optimistic about Qualcomm's future prospects. The company plans to announce its earnings on April 30th, and analysts expect it to post earnings of $2.79 per share. That's a 14.34% increase from the previous year. And when it comes to revenue, QCOM is expected to see a boost of 12.94% to $10.6 billion. But Qualcomm isn't just talking about short-term gains. Its full-year Zacks consensus estimates are calling for earnings of $11.78 per share and revenue of $43.34 billion. That's a 15.26% increase in earnings and an 11.25% boost in revenue from last year. Now, let's talk about the analyst estimates. Qualcomm has seen some recent revisions, which can be a good sign for investors. These changes often reflect the latest near-term business trends, so if QCOM is seeing positive estimate revisions, it's likely that investors are feeling optimistic about its future prospects. But what does all this mean in terms of valuation? Well, Qualcomm is currently trading at a forward P/E ratio of 10.82. That's lower than its industry average of 18.94. And when we look at its PEG ratio, which takes into account expected earnings growth rate, QCOM is coming in at 1.18. That's lower than its industry average of 1.17. So, what does all this mean for Qualcomm investors? Well, it looks like QCOM is undervalued compared to the rest of its peers. And with a Zacks rank of 3, which indicates a hold rating, there's certainly potential for growth in the future. That's all for today on Qualcomm Pulse. If you're looking for more insights and analysis on this stock, be sure to check out our latest report. And don't forget to subscribe to our channel for all the latest news and trends from the world of tech.